Hello and welcome to this session. This is Professor Farhat, in which we would look over internal control when it comes to the sales cycle. Now, in the prior session, specifically, we introduced the sales cycle. Well, I would suggest if you are not familiar or comfortable with the sales cycle to look at the prior session. Just real quick, when I talked about the sales cycle, I said the sales cycle, it's not only sales cycle, it also involves account receivable and cash. Those are the two main account related, as well as other accounts, but those are the two main ones. But in this session, we will focus on the internal control because it's the backbone of an effective sales cycle. Without internal control, fraud would occur at the revenue sales cycle, and that's bad. Remember the fraud triangle. You have what? You have rationalization. There's nothing you can do about rationalization. Anyone can rationalize to steal, to commit fraud. There is the pressure. Anyone could have pressure, but there is the opportunity. With proper internal control, we could eliminate the opportunity from fraud happening. And this is why internal control is important to do what? To destroy the fraud triangle by taking out the opportunity component of it. So for the sales cycle, we talked about internal control in general and in several sessions in the past. In this session, we'll focus on internal controls that deals specifically with which cycle? Sales cycle. So understand the sales cycle, then we're going to take proper internal control and apply to it. We're going to look at adequate separation of duties. We're going to look at proper authorization, pre-numbered document, monthly statements, internal verification procedure, access controls, physical controls, training, and awareness. Now, these internal control concepts, yes, they do apply to the sales cycle, but you might see them in other cycles as well. For example, adequate separation of duties or segregation of duties, SODs, they apply to any cycle, and we talked about them in general. Proper authorization, they apply to any cycle. We talked about them in general. Pre-numbered document, also, they could apply to any cycles. They should apply to any cycle because you want pre-numbered document for the purpose of completeness. In this session, focusing on how these controls apply to the sales cycle, let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website. Starting with adequate separation of duties. What is that? Well, we have to know the roles. Who's doing what and what someone can do and what someone cannot do. Roles within the sales cycle should be clearly divided to reduce fraud risk. And this is to make sure that not one single individual can take the transaction from A to Z, from sales to cash collection. This is to ensure that no single individual has control over all aspects of the transaction. But what are we separating when it comes to the sales cycle? The first one is order processing. The individuals who approve the customer order should not have access to the cash or the ability to record the transaction. So order processing, which is salespeople or someone taking the order over the phone, that should be separate from, for example, cash collection. Cash collection are people that touch the asset. Personnel handling cash or checks should not be responsible for recording or reconciling bank account. Those should be separate from that. Also, people that do reconciliation and reviews should not perform by someone who handles cash or who placed the initial order. So those three should be really separated. So reconciliation and review should be done by someone independent. For example, how much money did we receive that day from sales on account versus how much money made it to the bank. Reconcile those two. In case of fraud, an employee who have both recorded sales and handled cash collection can easily steal, because this is what happened in the past in fraud cases. If you handle the cash and you can change the record, you would steal the money and you will change the record and no one would know what's going on. So by separating these duties, the company could have prevented the fraud, as it would require the collusion to execute. So if you have one person handling the cash, one person handling the books, fraud could still happen, but now we need these two people or department to collide with each other, to collude, not collide, to collude with each other, to agree on committing the fraud, which you're making it harder for the employees to commit fraud. So adequate segregation of duties in the sales cycle. Basically, people that's handling the cash should not handle the record. No ifs and buts about it. Proper authorization. All transactions are properly authorized, starting with granting credit. If you remember in the introduction to the sales cycle, I stated that once we receive an order, sales on credit, what do we need to do? Check the credit worthiness of the customer. Why? Because we can sell to anyone. That's easy. But if that individual don't have a good credit, we basically did not make a sale. Why? Because if we cannot collect the cash, well, we just recorded the receivable without making a sale. Therefore, also having proper authorization. Proper authorization could be done electronically through a software. Software approves the credit, or it could be done by an independent party. A salesperson, if they allow them, they might fabricate transaction to inflate performance matrix unless credit checks are enforced, because they would sell to anyone. Salespeople, they would like to sell to anyone because they're going to get their bonus. They don't care about what's going to happen down the road. That's not their problem. So you don't want to let the salespeople go through the credit. Shipping authorization. Well, also, when we ship something, you want to make sure it gets approved. Someone approves the shipment before its final destination. What does that mean? It means when when shipment is made, it has to be matched with a sales order. So a manager would say, okay, you're shipping this, let me see the sales order. So we have a legitimate sales order. Otherwise, you could be shipping stuff to yourself if there's no sales order. Unauthorized shipment might signal fictitious sales to boost revenue figures as well. So if you have unauthorized shipment, what does that mean? It means the company is just creating shipment documents that they're shipping to do what? To increase revenue. Also, proper authorization for pricing controls. When we sell a product, there's a price on that product. We want to make sure we are charging the proper amount to the customer. So pre-approved pricing policy, making sure that our prices are consistent. No unauthorized discounts or inflated prices are granted. For example, on a personal level, a salesperson can offer unauthorized discount to friends or family member, resulting in revenue loss for the company. So an effective authorization control would involve requiring manager approval for all discount outside the predefined threshold. Again, proper authorization is an excellent internal control when it comes to the sales cycle. Okay? You could also use automated workflow that flag transaction requiring approval, for example, above a certain amount or certain product, ensuring compliance with established policies. So proper authorization is a great system for the sales cycle. Pre-numbered document, always good for any cycle. Pre-numbered document help to make sure that all transactions are accounted for, completeness, and allow for the deduction or missing or duplicate entries. It will avoid all of this. For example, sales order used to initiate the sales process should have a unique number. Shipping documents or bills of lading, it's going to show you the evidence of goods leaving the inventory, all unique documents, so we can account for every shipment. Sales invoices issued to customer for request payment, also that's the case. So you want to maintain a log of pre-numbered document. It's not only that, and someone periodically reconcile. Reconcile means what? Review these documents for making sure we're using them in sequence. If there's any gaps or any duplicate orders or shipping documents are being made. It's not only pre-numbered. On a regular basis, whether it's daily or weekly, someone go through this, making sure everything is accounted for. let's take a look at this multiple choice question from farhatlectures.com. In which of the following instances would the pre-numbering of document be a useful control? So we have pre-numbering of document. When is it a useful control? A, the company has a high number of documents for each accounting period. It doesn't matter whether it's high or low. I don't think that matters. Okay, so I would keep A on the side. Employees are allowed to use the documents out of numerical sequence. No, if you have a pre-number, use them in numerical sequence. It's better for completeness. There's no gaps, no skipping. I would say between A and B. A does not make any sense, but B should not be used. Why? Why use them out of numerical sequence? There's no reason to do that. There's no change in the numerical sequence used in each accounting period. There should be change in the numerical sequence. You gotta change the numerical sequence. That's fine. C, the sequence is being accounted for periodically. Yes, you want to account. If you have a pre-numbering document, account for them. It means go ahead, look at them, make sure they're not out of sequence, make sure everything is accounted for, all the shipping documents. If we shipped something, we build it. And if we build something, there's a shipping document. You account for them, make sure they're all there and accounted for. So you want to have this, the documents are accounted for periodically. So the best answer is D. What should you do now? You want to go to Farhat Lectures, look at additional MCQs. Whether you are an accounting student or a CPA exam candidate, invest in yourself. The CPA exam is worth it, and stay safe.